This is kind of a historic entry point because all of the risk has been stripped off the asset. Like, you pretty much know Wall Street's going to embrace it, the U.S. government's going to embrace it, and banks in the U.S. going to embrace it, which means that all the other banks will embrace it. You already know all those things, and yet the market is really skittish based upon concerns about tariffs, the disposition of the U.S. economy, the interest rate forward graph. And so you see the interest rates have pulled in 30, 40, 50 basis points. And we're in this macro risk off zone. When that flips, I think Bitcoin will rip forward with a vengeance.
Now, you said Wall Street's going to embrace it, and that is true, but still it's limited. I've been talking to these RIAs here. Many of them are very interested in Bitcoin, but a lot of them have questions when I walk around and say, what do you want to hear from Michael Saylor? They say, well, we're still concerned about suitability issues. We still have issues about recommending them to our clients. This is still a real concern. What do you say to those who are still concerned about suitability?
The only asset endorsed by a president of the United States in 50 years is Bitcoin. I mean, go back in the last 200 years in the history of the country. And I think if you go to the founding fathers, they wrote in the Constitution that money is silver and gold coin. And then at some point there was a chicken in every pot, and maybe with the founding of Fannie Mae and Freddie Mac, we endorsed everybody to single family home ownership. But in the 21st century, you have just one asset, Bitcoin. The president saying, don't sell your Bitcoin, saying more than that, saying the United States won't sell its Bitcoin. And so everything else you put your client into, if the U.S. government seized any other security that you sold to a client, if they seized any collectible, any art, any real estate, they would sell it. The only thing that the U.S. government won't sell if they are to seize it is Bitcoin.
Back to the channel. Aaron here from Bitcoin Bros. Got a quick video for you guys. Got a clip at the end. Make sure to stay tuned for that. Not a lot of news for Bitcoin or MSTR today, but looking at the most actively traded U.S. stocks, we can see MSTR is coming in the top 12 here with around $4 billion of trading volume. Definitely good to see there. And we fell 6 spots today. This is previously recorded on March 17th as I've been traveling, but you can see strategy is here at 127, around $76 billion market cap now, and we're just below that $300 level there. And remember, strategy could potentially qualify for the S&P 500 after this quarter. Q1 ends at the end of March, and the Bitcoin price estimated by Jeff Walton for S&P inclusion is going to be around $96,500. And if Bitcoin can get back up to that price, that will show that strategy over the past 12 months has had positive earnings there. And you can see here from the STRK buy that we saw on Monday, MSTR sold 123,000 shares of Strike via the new ATM and used the proceeds to buy around 130 Bitcoin. The preferred stock era has begun. So this is just the start of them tapping the ATM from STRK. They're probably just trying it out to see how it goes for the first week. And they bought some Bitcoin, not a lot for them. $11 million is still a lot of Bitcoin, but definitely a smaller buy for strategy there. And then a really good question here from Do No Harm. He's asking Ben, he says, do you see the purchase of shares Strike as a more positive impact on the MSTR share price rather than just tapping the ATM and selling common shares, short-term, long-term? And Ben replies and he says, it relieves the selling pressure from MSTR and moves it over to STRK. Definitely a good thing. A lot of people were mad, especially back in December, that Saylor was hitting the ATM so hard. He says the difference is that if they use the ATM on STRK and it drives the price down, then the yield increases, making it actually more attractive to investors and generating higher demand. It's a much better setup for MSTR to have this new ATM available. So he sees it as a positive shift in strategy, moving away from the MSTR ATM, which I'm sure they will continue to use in the future. But now they have a new ATM that they can hit with Strike. So that's Ben Workman's thoughts on that, and I definitely agree with him there. And getting into some Bitcoin news here. This is up to date here. We're currently seeing around $232 million of inflows for the ETFs on March 17th. IBIT is not out yet, but we're starting to see a little bit of a reversal in the ETFs. And every time we see this reversal, we start to see the Bitcoin price go up. So what happened? The CPI number came up pretty decently. The Trump tariffs, people are kind of forgetting about that, not really worrying about it as much. We also have the jobs numbers. They came out and they were decent. So there's a lot of fear that was in the market that is actually going away. So these potential inflows could reverse that price action for Bitcoin, and we could see the price continue to go up here over the next couple of weeks if we continue to see inflows here. And then pretty interesting here from crypto quants, they're saying that the Bitcoin bull cycle is over. If you see this chart here, you can see they have this sell indicator that comes up every so often. You can see back in 2014, it showed a pretty good sell indicator. In 2018, it showed a pretty good one. In 2020, it actually didn't show a very good sell indicator. It was very wrong there. In 2022, there was a pretty good sell indicator, and now we're seeing that again. And the founder of CryptoQuant says that every on-chain metric signals a bear market with fresh liquidity drying up. New whales are selling Bitcoin at lower prices. So he's thinking that we're in a bear market and Bitcoin's probably going to go lower or trade sideways. So that is something to think about there. And then just an update from Brazil. Brazilian lawmakers propose a bill to allow employees to pay salaries in Bitcoin with at least 50% paid in the Brazilian real. So that's all I have for today's video, guys. Quick one. I've been traveling, a little bit busy, so just trying to get these out to you guys, keeping you up to date. So really appreciate every single one of you that watches these videos. Like I said, I have a clip that I'm going to play for you guys. Like and subscribe for more content. I'm out. I'll see you guys in the next one and have a great rest of your day.
My view is the safest way to generate yield on Bitcoin is to contribute the Bitcoin to a public company. The company holds the Bitcoin and the company issues equity or issues debt instruments collateralized by the Bitcoin. That's right way risk. You haven't surrendered your Bitcoin to another entity. You have it, right? And so our company last year generated about $13.5 billion of Bitcoin yield, in my opinion, without any counterparty risk, right? Because we own the Bitcoin. And the way we did it is by selling bonds and selling equity at a premium, capturing the accretion. Last week, we sold a $2 billion bond and we generated $1 billion Bitcoin yield. We did it in 3 days. And we did it by issuing a bond collateralized by Bitcoin that was backed by, that was trading at a premium of 120% of the Bitcoin. And we bought the Bitcoin back and we made $1 billion. We call that BTC gain or BTC dollar gain. And my general advice to everybody, if you have Bitcoin in cold storage and you wanted to generate a yield, if you actually put it in a public company, then the cold storage asset trades at a premium because of the volatility of the equity and the utility of the public security. Then you sell the equity at the premium to capture the yield and monetize it. And that's happening now. There's like MetaPlanet's doing it. You'll see more companies do it. Do I consider other ideas? I do, but the other ideas, do I want to give my Bitcoin to FTX or Celsius or BlockFi? No, I don't want to, right? So last month, we sold a preferred stock. We sold $600 million of preferred stock. We pay a fat coupon, 8%. But but we're loaning the money to the Bitcoin network and yielding 60. We basically borrow at 8 and we loan at 60. Like what we do is my idea of a good idea is I'll pay you 10. I'll give the money to Bitcoin and get back 30 or get back 40. Now the catch is there's nobody on the Bitcoin network that's signing the loan agreement to pay me that. So I don't have a counterparty, but I just know I'm getting 30 to 60% interest. I would much rather pay and then get the interest. So we're reversing the transaction. And that's